Let's pull up the dollar. We've got to watch the dollar's reaction to all of this. We're going to pull up the DXY. This is the dollar index here. Big push pre-news. Let's see if it can extend those gains or if it will lose them. Breaking news coming in right now. All the numbers dropping right now. We should see some volatility here pick up. And there it goes. 8 o'clock rolling around and shooting up is the dollar. Look at this push, you guys. Look at that. Oops, I just moved my watch list around. Look at that. The dollar index right back up to 105. Big push on the hourly. Look at this. Are we going to break clean through resistance? Oh my goodness, we are. Something's happening. Let's take a look at the numbers. Oh my goodness, guys. That is a lot of green. That is a lot of green, and we've got a clear push on the dollar here. This is, let's do a quick rundown. Unemployment claims, better than lower than expected. That would actually be kind of cooling for the dollar, but it's about flat. Retail sales, much higher than expected, showing a strong retail consumption there. PPI, much higher than expected. Core retail, much higher than expected. Core PPI month over month also staying flat. That is a bullish dollar report. And look at that push. Again, most of the time, people love to dismiss news as, oh, it does a random thing. No, this is a clearly bullish report, and it makes a lot of sense if you understand the fundamentals. That's going to shoot the euro straight through the lows. Let's see there. Look at that push, guys. And this is a sell setup for me. If we get a pullback, I'm all into, I should say that very carefully. I'm not all in. I'm all interested. I'm very interested in a pullback setup here on the euro. Look at this. That's a crushing shoot to the downside. Gold probably taking a beating as well. And there it goes through the lows, guys. 1905 trading or breaking out, now trading at 1902.7. Just knocking on the door of that 1900 level, guys. That is quite substantial. What's happening to the indices? Are they taking? Yep, they're taking a beating as well. The S&P down here. The Dow reversing some of its gains here early morning during the London session. And again, silver getting shot down back down to 22.5. Gold, again, real big push to the downside. And this, guys, is a very interesting setup on the gold market for me.
Did you know our market scanning software, the EDGEFINDER, just got even better? Check out our newest asset, Bitcoin. That's right, Bitcoin was our most requested feature update, and we're so excited to announce Bitcoin is finally here with plans to add even more crypto in the future. We've also updated our most popular feature, the Smart Money Tracker, adding even more data than before. The EDGEFINDER not only automatically scores 8 different metrics for each asset to give it an overall buy, sell, or neutral score, but it also keeps track of bank and analyst positioning, stores historical fundamental data, shows how assets are trending throughout the day, and so much more. Right now, our YouTube viewers can get the EDGEFINDER at a discounted price when they use promo code A1YT. You can check out the EDGEFINDER with the link down in the description below, and again, get it for the special discounted price when you use promo code A1YT at checkout.
Again, I mentioned that I am short biased on gold. I'd like to see how these candles close, but this actually could be a really interesting possible gold short for me off of a retest into this 38.2. I'm very interested in that 1905.88 level if we close with some decision here off of the hourly. I love this setup, guys. I'm looking for a possible pullback on gold to trade this retracement and continue to be bearish on this. I've mentioned that, you know, the EDGEFINDER has a nice bearish reading, a -4, which if you are an EDGEFINDER user, you know that's a bearish reading. And, you know, also same with euro. I love both of these setups right now. Euro shorts, gold shorts. Those are two things popped right up to the top of my watch list here this morning. You know, congrats if you also caught some of the indices sell-offs. I'm not trading the indices right now, but very nicely done if you caught some of the S&P shorts. Same with the Dow. I think the Dow, well, yeah, there's the Dow. Look at this. Dow getting very bearish readings. That's significant and you know, rare for the EDGEFINDER to get that. But again, the EDGEFINDER played this perfectly here today. Everything kind of moving in accordance so far, which is significant. Again, Euro shorts, Aussie shorts, pound shorts, Kiwi shorts, all of those did very, very well. Gold shorts also obviously doing quite well. For me, I'm waiting for the technical setup, but I really like this pullback opportunity if we can get it on the gold market. Same thing with Euro. Both of those setting up beautiful opportunities. In my personal opinion, I do like the opportunity to get short on a Euro dollar retracement as well as a gold short on a retracement there as well. Glad to have you on, of course, and it's a great day to have you on with a lot of stuff happening with the dollar right now. One thing that I appreciate with Alex, I know you do a little bit of options trading, which I do as well. I know we both love to sell for premium, and with all this dollar stuff going on, what's your kind of approach? What's kind of catching your eye, and what's on your radar in the markets right now?
Yeah, so basically, I think it's depending on your own, let's just say, experience and how long you've been in the market and really how many things you have done and how much stripes you've earned. You can do a number of things in the market. When you're starting to trade, I believe you should go for more simplicity. And I actually would like to talk about that a little bit today in the show as well. But to give like just a little bit roundup of the macro side of things, because in my hedge fund days, the two traders that I've seen were successful were either statistical traders or macro traders, and statistical is not trend lines, but it's a lot more than that. You really need to have like an edge, and we can also talk about what an edge is. The point about macro, or the challenge with macro, and I think today is a very good example for that, because the ECB raised rates, but the euro's going down. What the heck's going on here, right? But in fact, it's pretty simple to explain. The ECB said like, hey guys, yeah, we raised because we sort of had to, but we're very much divided in between each other, the North and the South. Plus our economies are so shit, we really need to stop. The US is saying, well, you know what? We might just increase if we have to. And that divergence is actually, that's the easiest macro trade you can trade. Interest rate differentials of central banks. The challenge here is that even when the direction from a macro perspective is clear, quote unquote, the market can stay irrational for longer than you can stay solvent. And that's exactly what big players in the market do. They drive the market in the opposite direction to flush out the over-leveraged gambling guys to actually place their own big trades on the market, because they need liquidity. They cannot just put in billions of dollars on the market like that to then roll into the macro side of things. So in my perspective, what I've learned over the 20 years of market experience, and 10 of them actually in the hedge fund or with hedge fund experience, is that essentially the market is 3D chess with money. And what you try to do as a smaller player is to tag along to one big player who's actually having a good move at the moment, sort of,
Yeah, no, that's so true, Alex. And again, as you just mentioned, with macro trading, with understanding all of the different things, it's very, very difficult. And there's a reason why, this stuff is, we could go down this rabbit hole of it. Trading is obviously not easy, but I love that you broke that down for us with your experience in the hedge fund world. I've found that just from my own experience, I haven't been in the hedge fund world, but just in my experience speaking with so many traders, it is usually one of the two. It's the super quants, the super statistical people that either make money, or it's like you said, it's the fundamental people who just really understand it, but not just are analysts, but actually know how to apply it in a trading manner. I mean, it is not easy to do. And that's kind of the, when you first get in, you think, oh, it's going to bounce off these trend lines. And it's certainly not that easy. There is far, far, far more difficulty than that to, take money consistently out of the market. It's a joke to think that it's going to be an easy process.
100%. At the end of the day, if you want to make money in a market, you need to have an edge. And I think a lot of people don't really understand what edge means. From my side, or the way I would define it, is that an edge, first of all, is you need to have clarity of what you are attempting to do, and then also train to do it, and also have confidence to be able to do it, because you've tested it, you have experience in executing it, you know that it works from the back tests, from the live trading, from the numbers, so and that is, especially for people that are starting, in my opinion, should be rather data-based than macro, because macro has so many interpretation pitfalls, let's just call them, that really data is much easier to grasp, first of all, because statistical means that, okay, if I'm looking for a certain pattern within a certain trade session in a certain pair, with other certain combinations, that I actually can find a statistical validity to that is happening more often than not, and then I can also objectively describe it, because that's the next big question. If you cannot describe what you're doing, you don't really know, and there's only a matter of time before you're going to get punched in the face, really. So that's why it needs also to be, in my opinion, mechanical, and the most important underlooked thing, executable. Most people they try to do strategies they actually cannot do. If you are a scalper, quote unquote, all you do is you junkie in front of the screen and click like a monkey until you're fatigued. And well, at least most of the people, not the one. There are some that can do it, but even the ones that trade extremely short term, they trade liquidity, price, mispricing of quotes and these kind of stuff, and that's all algorithmic, in my opinion, at least. And so the problem really is that if you try to do strategy that you cannot do, you work on a job, you go to school, university, all these things, because that's what normal people do, and nothing about that is wrong or bad.
Right.
Then you should try to trade a strategy or come up with a strategy that actually fits that framework, right? And I think that's many people actually completely ignore that.
Yeah, no, you're so right. And again, we could go to, that's another angle, is how difficult just scalping in general it is. You're not only fighting how difficult it is to derive an edge or to build an edge out of the markets, but you're also just fighting the uphill battle of broker costs like crazy. So very, very difficult way to trade, in my personal opinion. I've said that several times as well.
I think people don't know that, in fact, I think it's about 60 or even 70% of total losing P&L is from trading costs. So people completely underestimate how much trading costs cut into profitability or the lack of it.
Yeah, no, you're so right. It's very, very important to know, if you could take less trades, you will basically be saving yourself some money in terms of trading costs. Now, of course, you want to take trades that fit an edge, and then if they're worth it, then you take the trade. But yeah, no, it's very, very true. So I guess, Alex, in terms of what is going on in today's world, tell us a little bit, I guess, about what your outlook is, or at least what your where you're positioning currently.
Essentially, I think right now we are dealing with a situation that is quite difficult to see through, because there are so many things coexisting that couldn't or shouldn't. Whether it's high bond yields with actually a good job market still, at least officially. You have still a high stock market, extreme valuations. You have still an AI hype. I mean, just Tesla the other day, because of their supercomputer, just ran through the roof. So there's so many things that, from a macro perspective or fundamental perspective, are hazy, I would say. And that's why I personally have stepped away from macro trades at this point in time, and I'm going purely statistical, purely trading things that have that currently really very well work in this environment. Because, for example, you're short on gold, I'm actually long today. Funny enough.
So what? No, it's all good. What's your idea behind, or what's, I guess, run us through why?
Yeah, sure. So essentially, just give me like a minute to really to get to that, because what I want to say is that the reason I'm trading like that at the moment is because I think something that people should definitely avoid is extreme long screen time, because it just fatigues and gives you bad ideas, let's just say, and also supports bad behavior, right? And any strategy that adds to losers is also something I would completely not do as a beginner, because that's essentially gambling. And it's just because if you, let's just say, divide your risk on 3 or 4 or whatever different targets that you're entering with, that's something else. But most people don't do that. They say, like, it's got to go short here, I go short. It goes long, oh, fuck, I'll add more. Don't do that, because you're going to crash your account to zero. It's just a matter of time, in my opinion. And it happened. I've seen it too many times. Another thing is unclear descriptions of what you're actually trying to trade. So look, I don't want to, badmouth anything, but what the hell is an order block exactly? Like all these people with their religious belief, and I'm not going to name the name now, but and they can't even define what the heck this is, what they're looking for objectively in order to trade from it. Liquidity, order block, you know what I mean, right? So these
Sure.
are things that just don't help you make good choices in trading. Maybe as you get more experienced, you have a better eye for things that you can, that you maybe also subconsciously or whatever, then be able to act on. But especially in the beginning, if you cannot define it, don't do it. It's my opinion. That brings me to my goal strategy I'm trading right now, because essentially what I've done so far is because right now I'm taking it pretty easy. I'm trading 2 minutes a day. Literally, I put one limit order per day, and that's it. I have a mechanical statistical system. It's back tested. It's live traded. I'm up this year about 30 something percent with 1% risk per trade on the strategy. I have I come in the morning a little bit before London session. I have something that's called the Alpha Trend Indicator. That's like an indicator that we've built with all our experience, from the hedge fund space and whatnot, that gives us a trend direction. And then I just look at certain price levels that we're also developed an indicator for. And then I'll put in my sell limit or buy limit order, depending on where I see the trend. And that's it. I put my targets, 2-to-1 risk reward ratio. If the trade goes into profit 40%, I'll pull up, I'll put it to break even, and that's it. And then I'll just leave. I have enjoyed all summer with the family, traveling, having fun, still making money. And because I think that this is in the current market phase where I'm not seeing a momentum in one direction really clearly showing, I'd rather go with these things that are statistically sound, that are easy to do, that don't take much of my time, and that I have confidence in, and that's exactly what I'm doing, and that's why I'm long. Actually, let me just pull up my MetaTrader here. So I entered long at 1901.99. So, and now we're 1905.70 at the moment. So my take profit is at 1910. So okay, well, so I'm halfway there. So I haven't put it. Let's see how it runs out. What's gonna be right of the two of us?
We'll see. We'll see.
It's not
Yeah,
a
no,
competition anyway. That's what I mean. There's so many ways to analyze something.
Yeah, no, that's the thing. And you've got a nice entry there with that 1901. That's the thing is at the end of the day.
And I put it this morning in, sorry to interrupt you. I did not like FOMO into it. Oh, the ECB
Sure.
did this. That was my defined level I put in this morning, and I didn't even look at the chart since then.
I like that. And I like, Alex, that you mentioned that. It seems crazy to people who are getting into the markets that you could get to a point that you trade for 2 minutes a day, right? For me, I thought it was crazy when I first got started that to what I do now, which is about 30 minutes to an hour. Obviously, I kind of count this as my time of trading. When I do the live streams, that's pretty much my time of trading. And a lot of that time is spent, just doing this, right? Interacting with other traders and speaking with people. So, for the most part,
which is pretty cool and fun also, I mean, it's not just the trading and the money, but it's also the social aspect of it, right? And the enjoying the craft and the whole thing around it.
Yeah. And that's the thing, because at the end of the day, now I should add something to that, Alex, too, is, you're at a point where you can trade for a few minutes per day. I'm at a point where really the actual execution components of my trading are, let's say, 15 minutes or less per day, depending on what's happening. I really primarily trade two different strategies, one being an options sell side strategy that I do. And then also, of course, kind of my traditional momentum trading that I do. And what I think is so interesting with it, Alex, is that obviously you can get to that point, but there were years before that where there was much more than 2 minutes a day spent. So for people in the audience, you hear Alex and I kind of getting to that stage of our trading, which is a phenomenal time in life, but you've got to earn it. And everybody in the audience who is still learning,
100%.
Yeah, you've got to earn that. It takes many years of
and we don't just say that because we want other people to have it hard. It's just the reality of things in whatever aspect of life. If you want to be really good and actually make it look easy, then you will have to get to that point. And that is not going to fall from the skies for anybody.
Right. Exactly. And I guess, Alex, I want to ask you too, in terms of your process of getting to that stage in your trading where you're trading for just a few minutes a day, which congratulations on that. That's amazing. What did it take? how many years are you into your trading journey? how did you reach that profitability stage for maybe somebody in the audience who is not there yet, who is like, how the heck do I get there? Obviously, these guys are talking at kind of that higher level of like, understanding how this stuff works. How'd you get to that point? For anybody wondering?
Sure. Like, look, my total journey is actually 20 years, but I don't want to scare anybody. What didn't exist then, but exists today, like back at the time, I lost all my own money. I lost my parents' retirement money on top. I was like suicidal actually for some time because I couldn't tell them. And like I had big debt, 6-figure debt. I didn't know what to do really. And I started as an intern at a German investment bank at the time. So, and I got lucky that I worked my ass off there, that I got connection with other successful fund managers at the time, that I sort of forced to be my mentors by just being nice and working hard for them.
Yeah.
And this is where I learned about like, this whole chart drawing stuff is nice and cute, but that's not how they trade, like, so how are they trading, And then I learned, okay, a lot of that, there is patterns involved. I'm not saying that patterns don't play a role. They absolutely are part of the game, but the statistics of patterns, that's something that I don't think, like if you have a trend line, for example, how do you know like if that trend line needs to be hit 2 times, 3 times, 4 times, and if you do it on a smaller time, you know what I mean? Like there's very little meaning in drawing a line that just you move a little bit up and down just so it fits your eye, sort of thing. That's playing around, which is fine. You want to gamble, have fun, go for it. That's all totally cool. I'm not saying don't do it. Even though that's not trading, that's gambling. And so what I learned is that you need to look for specific patterns. You need to actually narrow down things. You need to narrow down things and then collect the data, analyze it, and see, okay, what are the statistics of it? And then let's just say you build a certain framework, like, for example, a certain market or a certain pattern in a certain market, in a certain trade session or period of time. And then you go ahead and you backtest that. And I say like, okay, and now there's some good phases, there's some bad phases in there. What's actually causing the bad phases here? What would happen if I would, work on my trade management? What if I would, go off an ATR instead of just immediately enter? And, like you start to combine other tools in your toolbox with a statistically sound foundation, and then you actually have a much higher chance of actually coming to something that works. And in fact, I've even though like I stopped my mentoring a few years ago, what I did recently now is reopening teaching that process, because so many people kept asking me about it, and then to really explain to people, how do you build a strategy? What are the building blocks of a strategy? How do you get to that point? And that's what I'm saying. Like, you guys today have a massive advantage to catch up on all this stuff. I would say, and I don't want to like scare anybody again, but you can be quite profitable in a year's time with your own strategy that you develop, actually.
Yeah, no, and again, of course, with the catalyst of tremendous work like you've put in and myself have put in to get to that stage where, and I guess also one thing I also like to add with that, Alex, is that, the gap between what people think highly profitable traders are versus what they are not is also really big. A lot of times people think that like once you get to that point where you are a profitable trader, that you just start printing it like an ATM. And the reality is that, as you understand, and I understand, with like having some form of an edge, you're not going to get an 80 to 20% edge in the markets. You're going to get, if you're very good, like 55, maybe a little bit slightly higher than that. And if you can get,
that's why you need a risk reward, right?
Yeah, exactly. And so the point is, like, even once you get to that point of being profitable, what people make the mistake of is, even if they do have a good strategy that they've backtested, they, I guess, to really put it into perspective, they ruin it by putting too much risk per trade. And that's the thing. There's so
100%.
much to, even if you have a good strategy and a sound method in the markets, you still have to trade it slow and steady. And slow and steady doesn't yield massive profits quickly. It yields massive profits, certainly, but over time, like over an extended period. And that's where, guys, if in the audience you're listening to Alex, who has more years of experience than I do in this, or you're listening to me when I've been doing this for 8 years. And the point is, you're hearing it from people who are real traders. These are not Lambo lifestyle people. These are people who are doing it every day and taking it very seriously. And this is the real stuff. Again, Alex, I want to throw it back to you in just a second, but I just want to say, to everybody in the audience, these are the sorts of people that you really should learn something from. Alex, you mentioned that you have some sort of mentorship component. What's the best way, Alex, for people to find you, to reach out to you if they are interested in speaking with you or learning more from you?
So basically, the best would be just go on my Instagram. It's AlexDou, ALEXDOU. You find a link in my bio, and then you actually can follow that, and then we'll pick it up from there. What I wanted to do is really, first of all, basically my gold strategy that I'm trading, I'm giving that to my students. Why? Because I want them to see how easy it can be, how simple and quickly with 2 minutes per day, you could actually be in the market without, making your brain crazy and without, taking crazy risks and all these things. But at the same time, there's a massive amount of learnings and video courses and individual support and all of that in order to teach people. Now you go also develop your own strategy like that. Why would you not? Who am I? I'm just a regular guy like anybody else. I just spent more time doing that stuff, and that's really the only difference. But the craft of it, or there's a German saying, everybody cooks with water, So, and that's just the reality of things. There is no magic something out there. We all know, even though I do show myself a little bit with lifestyle stuff because I just enjoy life, so I don't want to say it's completely devilish, but that Lambo lifestyle traders, they make their money from different angles,
Right.
not from the trading side of things. So that's why I want to give people everything they need to become traders that learn information that is actually, first of all, executable, quantifiable, and also that they can tailor to their own lifestyle. I think that's the most important thing that people actually, like I said, forget to do. They try to do these, and even another thing, please guys, because that's the most misused stat in the trading industry is hit rate. Hit rate is nonsense. You can have a 99% hit rate and make 99% of your trades with 0.1 lots, and then you make 110 lot trade and it screws it all up. Then you had a 99% hit rate, but you still have a margin call. Really, hit rate needs to come with risk reward per trade, and it needs to be consistent, and only then it gives you any information about the quality of the strategy.
Right.
But again, maybe I'm getting too technical here, but just because these Lambo guys, when they throw with numbers, it's usually hit rate, and it cracks me up, to be honest.
Yeah, no, I mean, Alex, again, you can tell a lot of people in the audience are very impressed with just hearing from you, and I'm very glad that we were able to do this.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.